Yo, what's good, guys? Welcome back to another trading video. Today's video, I'm going to be going over the full unicorn strategy setup with ICT's concepts. Before this video starts, I just want to say that this video is in fact no financial advice. I'm not held responsible or accountable for anyone's losses. I do recommend you to use demo trading, paper trading, or any type of simulated account before you enter into a live trade. So trade with your own discretion, and yeah, let's get right into the video. All right, so moving forward, I'm going to show you guys what it takes to identify the unicorn strategy and then how to enter it. So the only thing you need is, if you guys didn't watch my previous video, this is a bootcamp series. It's just a 3-part series. Go to my first video. Link is on the top right of the screen. It starts from the beginning, talking about starting from the silver bullet to the market structure shift, liquidity sweep, fair value gap, and premium and discount, and then order blocks. So if you guys want to see the first premium and discount video, go watch that first, and then watch my order blocks video and breaker blocks, and then come to this one when you watched all those two first. Okay, this is similar to the silver bullet, but it adds an extra confluence. This trade isn't meant to be traded on its own. You need to trade it with other confluences such as a market structure shift, liquidity sweep, fair value gap, and then you enter. So you don't just enter it blindly. All right. The 2 time frames you're going to be using to enter this trade is the 5-minute and 15-minute. So I like to do 5-minute because it's faster, and 15-minute takes a little bit longer, but 15-minute is better. It is the best for better confluence or better confirmations to your trade. But 5-minute, I like to take my risks and do 5 minutes since it's a little bit more faster for me. Anyways, so you're gonna come up and mark out your highs and lows before 9:30. So at 8:30, this was the lowest point. All right. Lowest point before 8:30, and the highest point before 9:30. This is 9:25, which is this high over here. Price would then come down. We're gonna wait for a draw on liquidity, or liquidity sweep as we call it. So we got a liquidity sweep to the upside over here, but prior to that we had an order block. So in my last video, I said an order block consists of a strong move up and in a basically the opposite direction. So in this case, it was going down, and we had a strong reaction or strong move up of multiple blue candles or bullish candles. If this was going up initially and we had strong move down, then technically that would be the order block as well. In this case, we had a liquidity sweep to the top because of this order block. So moving forward, this is an order block. We're going to wait for price to come down and close under the order block, making it a breaker block. So we're not going to enter before the order block is broken, right? So as you can see here, at around 12:30. By the way, just want to say, you're supposed to trade this strategy from 9:30 to 2 p.m. every single day. You don't have to last all the way till 2 p.m., but it can last all the way till 2 p.m., 2:05, 2:10, around there. Okay, that's where you usually, basically, from New York stock market open to New York stocks close, or not close, but like slow down, quote unquote. It starts slowing down after 2 p.m. So yeah, moving forward, we had a close over here at 12:30. This black candle closed under this order block, making it a breaker block. Then we had a market structure shift, this shifted structure over here, leaving us with a fair value gap. So this is a fair value gap, and this over here is a fair value gap, and this one is a fair value gap. We're going to take the most recent fair value gap, the one that caused the order block, or sorry, the breaker block, which is this one. Okay? And this is where premium and discount comes in. Just for extra confirmation or extra confluence, we're going to take our Fibonacci tool and mark out the highest point to where it closed. Right over here, for extra confirmation. price would, basically this is a fair value gap over here. If price came up to here, this wouldn't be a change in direction. This would just be tapping into the fair value gap, right? But in this scenario, it was this acted like an inverse order block or breaker block, meaning we don't need this Fibonacci tool. We don't need to use premium and discount for this one because price did not react all the way to this fair value gap up top here. Okay, because this over here was a market structure shift as well, but it's an untapped fair value. It's an untapped fair value, which is fine. Okay, so as long as this one gets tapped over here, you're gonna go for an entry short. As soon as it gets tapped in, you're going to do, you could do opposing liquidity, but you could target previous lows like this one over here, down here. You could target this as a take profit and put your stop loss all the way above the breaker block. Okay, so this is an easy 1 to 2 risk to reward, and as you can see, price tapped it in over here. I didn't trade today. This was a setup today that I was watching. I couldn't trade it because I was busy. So whoever took this trade and does trade unicorn setup, good on you. But that's basically how the unicorn setup is. I'm going to go over how it would look like on an actual path, so it's a little bit more clearer for you guys. Some people do prefer looking at the path tool. So every time you get let's say we're gonna go for a sell, all right? You get a liquidity sweep to the upside. Okay, so this is a liquidity sweep. This is now liquidity down here. Then price left a order block, a strong move up. Okay, it left a strong move up, meaning we're going to wait for price to then come down and break below the order block, making it a breaker block, leaving behind a fair value gap somewhere around, it could be somewhere around here, having price come back up into the fair value plus the breaker block before pushing price further down. Okay, and earlier, to set your profit target, you would essentially have some sort of liquidity point, sell side from earlier, down here, to basically give you a take profit. Because if you don't have a take profit zone, you can't really trade, I guess. And every market or every chart has a sell side take profit, but not every market has a bullish take profit. In Nasdaq's case, it's continuously making all-time highs. That's why you can't identify a take profit when you're going bullish. So yeah, that's something to keep in mind as well. So I hope that the unicorn setup is cleared for you guys. It's pretty simple. It's one of the easiest setups next to the silver bullet and next to the Judas swing. I will be making more strategy videos and clearing this up more on my one-on-one mentorship. If you guys need any help, go in the description down below, message me on Instagram, Discord, or let me know in the comments if you need any help, and I will be happy to teach you guys or let you guys know what I know because of my experience. And yeah, I hope you guys enjoyed this video. I'll see you guys in the next video. See ya.